Hey there and welcome to our channel. In today's video, we'll be discussing systematic risk and its relationship with fiat money. We're excited to share our thoughts and insights with you, so let's get started. Hey everyone. Welcome to our video on systematic risk and its relationship with fiat money. We've all heard the horror stories of the 2008 financial crisis and the recession that followed. But have you ever wondered what caused such a widespread market downturn? The answer is systematic risk. Systematic risk, also known as market risk, is an inherent characteristic of the financial market. It reflects the impact of economic, geopolitical, and financial factors that have the potential to affect the entire market as a whole. This type of risk is distinguished from unsystematic risk, which only impacts a specific industry or security. During the recession, we saw how systematic risk can cause different asset classes to react differently. Riskier securities, such as those that were more leveraged, were sold off in large quantities, while simpler assets, such as U.S. Treasury bonds, became more valuable. But there is a silver lining. Unlike systematic risk, unsystematic risk is specific to a particular group of securities or an individual security. This type of risk can be mitigated through diversification. For example, if an investor holds a portfolio of securities from different industries, the impact of an event that affects one industry will be less severe than if the entire portfolio was concentrated in that industry. Now let's talk about fiat money. This is the government-issued currency that we use in our everyday transactions. It is backed by the government's promise to accept it as payment for debts and taxes. The relationship between systematic risk and fiat money is closely intertwined. In times of market turmoil, such as during a recession or financial crisis, investors tend to flock towards safer assets, such as government bonds or cash. This causes the value of the fiat currency to appreciate. Conversely, in times of economic prosperity, investors tend to seek higher returns in riskier assets, such as stocks and real estate, which can cause the value of the fiat currency to depreciate. Governments and central banks use monetary policy tools to try to mitigate the impact of systematic risk on the value of the currency. For example, the Federal Reserve in the United States uses tools such as interest rate adjustments, quantitative easing, and open market operations to try to stabilize the market and keep the economy on track. But even with all these tools, it's important to remember that systematic risk is largely unpredictable and difficult to avoid. That's why it's important for investors to build a diversified portfolio of different asset classes, in order to mitigate the impact of this type of risk on their investments. Thanks for watching, and be sure to hit that subscribe button for more engaging content on finance and investing.